Monitoring at simplysafe.com/radio. There's no safe like Simply Safe.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you here on a Tuesday. And we're going to do a little bit of housing talk to kick things off, because one of the questions that has been lingering out there for the last few months now is this divergence that has built between what we are seeing in real-time rent reporting from places like Zillow and Apartment List and what's known as owner-occupied or owner-equivalent rent, in the CPI Consumer Price Index, where what we've been seeing is that if you look at data from, live broker data from Apartment List and Zillow and places like that, it's saying, hey, in most parts of the country, rents are barely moving up, and yet owner equivalent rent in the CPI data, which is a major factor for how inflation is calculated, is still rising at a pace that is pretty rapid. And Mark, I'm interested to get your thoughts on this and whether it matters or if it's just a bunch of hullabaloo.
It certainly matters, Chuck, but I don't know that it matters for the reasons that people tend to give attention to it for. And by that I mean shelter is a big part of CPI or core CPI. It's more of core, obviously, than headline, which has more stuff in it. But it's only one component. And if there's one thing I'd like on my gravestone, if I accomplish nothing else, which is looking increasingly likely, it's
the gravestone part or the accomplishing nothing else part.
Yeah, well, both are.
Because the gravestone part, unfortunately, I hate to break it to you, Mark,
that is a hard stop.
Yeah, we've got the likelihood of that is not changed for either
it's looking
of us.
increasingly likely there's going to be a lot of room on that, headstone. So, one thing I'd like a sort of a message to posterity: focus on the median, for Pete's sake. And by that I mean filter out in your mind the one-off effects of rises or falls in shelter. Just for a moment, we'll come back to the particulars of this.
Sure.
Because it might be interesting on a technical basis, but again, keep in mind that inflation is a rise in the average price, a result of an imbalance in supply and demand, which can in turn in the long run be attributed to too much money being printed. That was the lesson and the story of the 70s, and it's as true today as it was then. The linkage is not perfect. Money takes time to work its way through the economy. In the short term, you get these shocks. They could come from oil. They can come from food. They can come from transportation. They can come from cell phone data plans like they did in 2018 that throw us off the scent of the true trend in inflation. And I get concerned that getting hung up, I'm not concerned about anybody in particular here, but getting hung up on what's going on in housing focuses on one component of inflation, that things like the median filter out, because what we care about is the trend, not just what housing's doing, though it's interesting, or not just what oil or food or transportation or medical insurance or other costs are doing. So interesting on a technical level and good news for potential renters. That's one takeaway for me, though we've known that for a while with the boom in multifamily construction. But not necessarily good news for inflation because there are a lot of different contributors to inflation or disinflation from month to month.
Let's talk a little bit about this idea of median inflation. And for those listening, the premise is very simple. In a series in which you have 100 observations, median inflation, if you take all 100 observations of inflation for a given month, and the top one is running at 1.5% for the month, the bottom one is at 0, the median one is the one where there's 50 above and 50 below, and it comes in at whatever. So it's saying half the observations in this series are rising faster than this. Half of them are rising more slowly than this. And what this does, it doesn't tell you anything about, again, the overall inflation rate. But Mark's saying disregard that, and we'll get to why in a second. It's just saying, hey, if you weight these all the same, like just say that they exist, in a world in which half of the prices being captured are rising faster and lower, this gives you an idea of, hey, what's the dispersion of this? What's the midpoint of the inflation that we're seeing out there across all objects? Not on a weighted basis, because weightings can change and they can be inaccurate and this and that, but just, hey, what's the point at which half the prices are rising faster and half are rising more slowly? Is that a fair assessment?
It filters out the big disturbances on the high end and the low end. It's the same reason we talk about median salary and median sales price. There are other measures of central tendency, a fancy phrase for what's really going on in sort of the meat of the distribution of stuff. There are other measures of so-called central tendency. The mean or the average is one, but we all know an average is very sensitive to big fat occurrences on the high end and little tiny occurrences on the low end. Again, we take median salary, median home sales price, median test scores. We do that all the time without thinking about it. There are researchers who've done the same for inflation and have found that the median is a much better predictor of future inflation, hews much better to core inflation or underlying inflation. I'm using core generally or not in the ex-food and energy sense than some other measures, which is why I'm sort of obsessed with it, and which is why when I see stories like this that get really technical about what constitutes inflation in a CPI sense versus what constitutes shelter home inflation in a CPI sense versus the way Zillow calculates it and what that means for average prices in the economy as a whole, I say, well, that might be material, but what really matters is whether or not the economy is running ahead of its speed limit.
So let's talk about this median CPI and just tell you a little bit about what it's shown over the last decade, just as an example. So if we go back to the start of 2015, so looking back at 2014, at the end of 2015, CPI was running negative 0.1%, largely because gas prices had fallen off a cliff. At the same time, median CPI was running at 2.2% for the previous year. So median is basically saying, look, yes, we know that gas prices were low, but that didn't matter. Here's what we were actually seeing in terms of how prices, half of them were moving faster than this, half of them were moving lower.
Yeah.
Over the next 5 years before the pandemic, 16, 17, 18, 19, even into 20, you basically saw median CPI running anywhere between about 2.3% on the low and 2.9% on the high. So it was coming in a touch higher than traditional CPI was at that point, and was more stable just because it filters out all those fluctuations and everything.
Yep.
Where we stand right now is that CPI for the last 12 months has run at 3.1%, but median CPI is running at about 4.85%. This is all calculated by the Cleveland Fed. They publish these, about a day or so after the CPI release comes out. And so this is saying, look, there still has been progress on inflation if you look at median CPI, because it's down from 7.1% in February of 23, about a year ago. But unlike the headline reading, which has dropped from 9 down to 3, and even unlike the core reading, which has dropped from 6.6 down to 3.8, you still have more room to go on this median, because basically what this is saying is the stuff that's weighted less in CPI is still running hotter than you would think if you just looked at the CPI reading. Is that a fair way to look at this?
Look, CPI month to month gets thrown by big shocks, positive or negative. Think about it. Oil is not a sticky price. It changes every day throughout the day. Food is not a very sticky price. Prices
Right, oil.
at the
Look, you can go to a gas station. And there's a different price.
You
in the
can see
afternoon
it.
than the morning.
We all experience it. This is true of other goods too, namely food, and maybe some stuff on it increasingly through online venues like Amazon, where so-called menu costs are not an impediment.
Can we talk about one other area that we're now seeing that may impact this?
What do you got in mind?
I don't know if you saw the news yesterday. Let me just pull this up to make sure I quote this correctly. But let me make sure. Yep, here we go. Wendy's is going to be doing dynamic pricing on their menus. Did you happen to catch this, Mark?
No, and I'm a patron too.
It's actually, I believe it's towards the back end of today what we're going to cover also. But what it means is, let's say that you go to get a cheeseburger at 3 p.m. Wendy's may say that cheeseburger is going to be cheaper than if you try to get it at 6.
Nice.
Maybe.
I'm going to shift my whole meal schedule, breakfast, lunch, and dinner.
But
not every day. But
here's the counterintuitive thing about how Wendy's may look at this. If you think about trying to staff a Wendy's, what if your surge all of a sudden just becomes earlier because people are trying to take advantage of that, and now you're improperly staffed, and now you got to and this is even before I get to why I might not like this in general. But when we talk, sorry, complete divergence, but I just had to cover it. But bringing this back to this discussion of median CPI, what median is telling you is that when you look at the components of CPI as a whole, unweighted, they're not coming down as quickly as the weighted version would lead you to believe. Is that fair?
They do apply weights when in calculating the median. So it is as counterintuitive as it sounds because it's just like one observation. It's not quite that simple. But the way I always think about it is you get the very flexible prices. Just use oil as an example.
Sure.
Goes up by a lot one month. What's going to happen to the average? Well, not everybody else changes their prices. Not everybody else moves their prices down. If consumers only have a certain amount of money to spend, oil goes up. In theory, spending on everything else should go down. Doesn't actually work out that way, though, because no one else is lowering their prices. Maybe they can't react in time, or maybe they choose not to because they're not sure what other firms are going to do. The bottom line is big shocks, up or down, can pull the average up or down because nothing else sort of changes in that shorter period of time. The median does not go for those head fakes. It's much more robust, as statisticians like to say, as a measure of, I'll say again, central tendency. What that really means is what's going on in the middle of the distribution, which is what we care about because that's on average how much we're paying for stuff.
Let's take a quick break here. When we return, talk a little bit about some of the barriers to home ownership right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan are experts in elder law, and if you're ready to start your planning or need a refresher done on your existing plan, you need to get their new guide called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn strategies to help you protect your assets from probate, as well as the nursing home. We'll also show you how to properly create your will and set up your beneficiaries in a way that will ensure your family's security for the long term. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. Proper estate planning is not easy. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Breaking business news as it happens, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Piece from CNBC today, Mark. Aspiring homeowners say they face two major obstacles, and here's why 20% say it'll never happen. The subheadline is more than half of aspiring homeowners say the cost of living and insufficient income make it difficult to afford a down payment. So first of all, cost of living and insufficient income are actually one problem, not two, because if your income was sufficient, then the cost of living would not be a problem. It's neither here nor there, but I just like to point out.
I'm sure they'll be happy for that technical. Thank you for that technical.
I love to be pedantic whenever I can. It just gives me so much satisfaction in the world.
Appreciate that.
To know that I could do this better.
Problem solved, kids.
Than this summary here. But here's what we are seeing. When asked about their ability to buy a home, 20% of aspiring homeowners said they may never be able to save enough for the down payment and other costs. Meanwhile, 30% said it could take them at least 5 years, and 10% said it could take them at least a decade or longer. And I've thought long and hard about this in order to figure out how to get my answer across without appearing to be horribly insensitive, and I've decided that there's no way, so I'm just going to come out and say it. If you're trying to buy in the most expensive markets making a low income, you're not going to be able to. That's what it is, unfortunately.
Sounds like common sense.
And that's how it's always been. When we talk about like the baby boomers who were going out and buying property and how, they had the ability to do this, I'll give you an example. My parents, when they were, before I was here, they decided that they were going to buy a home in the Boston suburbs. And specifically, they bought out in Framingham back in the early 1980s. And for anyone who's familiar with the Boston region, Framingham, Massachusetts is about, I don't know, 40 minutes outside of downtown Boston. In the 1980s, it was talked about like you were living out in the freaking sticks, like you were in the boonies, and wow, how is that so far? The reason why they were able to buy a place out there was because not many other people wanted to at the time because it was considered to be really far from Boston. As prices have gone up because of more people, more demand, places like Natick and Framingham have gotten much more expensive because people push out to where they can afford. So ultimately what this boils down to is you either have to go further from the city than people want to at any specific point in time. In the 1980s, it was Framingham. Today, it's probably out in like Worcester. Or you got to look for another city like a lot of people did, in basically all of American history. If you look at people who have, been able to, afford real estate easily, it wasn't by staying where everyone else already was. It was by going out and saying, whether it's in the 1600s, hey, great, we got this grant of 10,000 acres, in wherever. Or it was by saying in the 1900s, you know what? We're going to move way out, 40 minutes outside of, whatever city this is, where people don't really live right now, and that's how we got land and built a house cheaply. The idea that you can do anything cheaply where it's already highly clustered and highly, packed in is just ludicrous. So I think, unfortunately, when we look at this, it ultimately comes down to people wanting to live where a lot of people already do right now, and that's always going to be expensive. And I'm sorry about that. That's just how it is.
Yeah, it's not clear that there's a market failure here, which is economist term for whatever reason, maybe due to lack of information, disincentives to coordinate, or somebody exercising a lot of power. Market failure calls for government intervention. And there are a lot of people who are calling this a housing shortage. That's a common phrase, right? Sort of a shortage,
yeah.
Which seems like a bit of a misnomer. The tight market, Chuck, as you suggested, is as a result of homes being desirable. It's supply and demand. It's a consequence of people expressing their preferences to own. There's not much you can... Now, towns can change their zoning laws, and some are being pressured to do it. We can build more multifamily housing. That's not a solution to the problem of the aspiring homeowner, but we're doing that in unprecedented volume. Not much else you can do here but let the market work. It's really not a bad problem to have, right? It's a sign of economic vibrancy, these increasing prices. Maybe I'm biased because I'm on the homeowner end of this equation. I don't know.
No, look, I'm not saying that there's... And here's the other piece that I also come back to on this is these pieces come out all the freaking time. And as someone who's gone through like a couple cycles of this, I remember back in 2013 and 2014, all the pieces about, oh my goodness, it's so expensive to buy right now. How are millennials ever going to be able to afford homes? And now all you get are a bunch of people from Gen Z complaining about all the millennials that have bought homes in the last 10 years. And wow, if only I could have bought back in like 2015, that would have been great. But all the pieces back in 2015 were, the cost of housing is so high. How can we... Am I wrong on this, that if you just wait 10 years, the cost of housing before is look cheaper?
No, you're right. That is a lament. When I first started looking in the early 2000s, before the peak, which we all knew, by the way, was mounting, starting in 2002, 2003, everybody was talking about skyrocketing home prices in this area. The lament at that time was, oh, if only I'd bought... You heard anecdotes about somebody who bought a house in Brookline for $395,000, now worth, $1.8 million back in 97. A lot of true stories out there like that. You heard those. Obviously, the endpoint was less then, but you heard those in the early 2000s, and you were lamenting that you hadn't acted earlier. So, no, I think it's a pretty common thing, Chuck, to regret not having bought 5 years ago, no matter when the clock starts on that 5 years.
And your first home is always kind of not great. Like, my first one was a 2-bedroom basement unit in Somerville that barely got any water, any air coming into it, any light coming into it. Occasionally had a little bit of water dribbling in. And no one wanted to live there, which is how I was able to buy it. It wasn't the Taj Mahal. Let's take a quick break. When we come back, we've got Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing and Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets remain mostly quiet and are in mixed territory as traders await several economic data releases this week, including a fresh look at inflation in the core PC index on Thursday morning. Right now, the Dow is off by about 1/3%, S&P 500 up by merely 2 points, and the NASDAQ is up by about 0.25%. Russell 2000 up by 1%. 10-year Treasury yield flat at 4.29%, and crude oil up 0.2%, trading just above $78 a barrel. Lowe's posted better than expected earnings and revenue for the fourth quarter ahead of the open this morning, as the home improvement retailer saw fewer customers address home projects. However, the company said it expects total sales of between $84 and $85 billion for the current fiscal year, a drop from about $86.4 billion last year. Lowe's also said it anticipates comparable sales will slump between 2 and 3% compared with the prior year. That stock currently up by nearly 3%. Meanwhile, shares in Zoom Video up by 4% after the video chat software company beat earnings and revenue forecasts. Zoom noted growth would have been faster in the previous quarter if not for a sales reorganization. Elsewhere, Workday posted mixed fourth quarter results where the enterprise software firm beat earnings estimates, but its revenue just met expectations. That stock down by 2%. AutoZone up by 5% after the auto parts retailer beat earnings and revenue forecasts. And Roku shares down by about 0.5% after Wells Fargo downgraded the streaming device company to underweight from equal weight, where the financial firm said Roku's growth could be hurt by Walmart's recent acquisition of Vizio. I'm Tucker Silva, and that's Wall Street Watch.
Mark, the FTC is suing to block the $25 billion merger between Kroger and Albertsons.
Shocker.
Thoughts on this?
Oh, I just whispered shocker sarcastically. This is a very aggressive FTC. Probably shouldn't surprise me. This is a liberal Democrat administration, and they tend to be suspicious of agglomerations of power, even kind of regional ones. So as I understand it, Chuck, please correct me if I'm wrong, and you may be a little more sympathetic to breaking up anything that smacks of somebody that could exercise market power to the detriment of either consumers or labor, but they cite the potential harm that could be inflicted on unions who will have less leverage with a bigger company among their justifications. And as a consumer, I just kind of scratch my head and say, well, that would be unfortunate, but that's labor's problem. There are ways around that. Will it result in higher prices? Unclear why a merger with a merged company with more scale and stuff will. Where's the prospective consumer harm here? That's my question.
Yeah, even I'm not sure on this, and I tend to be, my view tends to be, I prefer less regulation in general, but very aggressive regulation when it comes to antitrust. I'm a big believer that the more competition you have, the more of the other problems get sorted out on their own. So I would rather be very tough on antitrust grounds and have tons of competition and kind of let everything else just go, because if you have other places to work and employers have to compete for workers and for customers, I think it squares away all of the other concerns that are out there, because you can easily lose business. Whereas, hey, if there's a lot of, if you have companies that, do combine and you have a lot of, and not much, sorry, I'm just completely missing the word, and not much competition out there, then I think you do end up in a situation where both workers and consumers can't necessarily find alternatives. So I think as long as you have ample alternatives, the rest is kind of fine. It'll figure itself out, for the most part, aside from, basic safety laws and stuff, which you obviously have to have in place just to, get workers to trust that they're not going to get hurt coming into work. So on this, I kind of look at it and they're like, well, this might lead to, problems with unions being able to get fair, deals. And I look at it and I go, so I believe there are 3 grocery chains in the country that have unionized labor. 2 of them are in this deal, Kroger and Albertsons. The other one, any ideas, Mark?
Our Shaw's Star group here, whoever that
Stop
is.
and Shop, Ahold Delhaize, exactly.
Thank you.
So those are the 3 groups that have unionized labor in grocery stores right now. I'm not really sure how a merger of the 2 out of the 3 who used unionized labor would result in worse terms being negotiated by the union that's already in place there.
Seems very look. I can envision a scenario in which it does, but that seems very speculative, and forecasting that is very problematic. So should the harm be imminent and concrete and reasonably imminent? Beyond foreseeable. I don't know. This is way out over my skis here. They're antitrust economists, and for that matter, lawyers who could home in on the key argument. So, pardon the sloppiness, but shouldn't there be some reasonably good prospect of harm materializing? Maybe an antitrust lawyer or economist would say, yeah, stupid, there is. That's why we're contesting this. Okay, if that's your standard, but a more conservative economically administration would take a more hands-off approach and apply the consumer welfare, as I understand it, standard, which is, will consumers be harmed? If yes, then go to the next branch in the tree. If no, then, don't sue to block.
And I guess the other piece that I come back to on this is the FTC for the last 15 years has gone off after, all these little small mergers that quite honestly don't matter. I mean, I remember it was 2014 or 2015 or somewhere around there, and they were going after the Staples Office Depot merger. And I'm sitting there, I'm going, you guys are worried about, Staples or Office Depot picking up pennies on the train track as Amazon's coming through, about to put both these stores, not out of business, but not in a very good spot for the next decade. And this is where you want to fight. There was another one a year or 2 ago. I forget which 2 publishers. It was, let me see. Hang on. Who was it? It was
it Penguin?
It might have been Penguin and Random House or something like that. I can't remember who it was. But the FTC was suing to block like $1 billion publishing merger.
Well, I guess they're applying a concentration standard as opposed to some kind of.
But even there, I'm looking at it. I'm going, do you guys know what Amazon has done to the book publishing business?
It was it was Penguin, Random House, and Simon & Schuster.
Yeah, I'm sitting there. I'm going, this is your concern about the book publishing business?
Yeah, there's a relevant market to be defined, right, in all of these suits. So what is the market? It's like when going after Amazon. Is the market online next-day deliveries for companies that also offer a video service? If so, yeah, Amazon's pretty much got that cornered. Is the market anywhere you can buy something online? If so, yeah, they're only about 25% or so of that. So relevant market definition plays a lot, and there's probably a lot of wiggle room in that for an aggressive prosecutor, right?
Yeah, so this to me, and it's weird for me to say this because normally, like, I see antitrust in a piece and I'm like, oh goody, like this is great, someone's doing something finally. I kind of look at this and I'm like, I don't know, this doesn't seem to be a great case necessarily, but we'll see how this one plays out. But normally, the words antitrust are like catnip to my ears. I'm like, oh boy, someone's pulling an antitrust suit. Like, let me see who's like. I want to see this. Instead, this is just. I just don't know. And the other piece on this is, keep in mind that Albertsons 9 years ago merged with Safeway. And as part of the deal, when they merged with Safeway, they had to divest, I think it was like 150, 160 stores to another company. They ended up having to send them to, I think it was Hagen Grocers or something like that. Well, Hagen Grocers filed for bankruptcy a year later, and those 168 stores shut down. So the FTC looked pretty bad there because the FTC said, hey, in order to have enough competition, you've got to get rid of these 168 stores so they can still compete with you. And then those 168 stores merged with a chain that went bankrupt, and so you can't compete if you're out of business. So this has me going, I don't know. And normally, hey, you have an antitrust case, I'm all in on it. This one, I'm kind of like, ugh. I just don't know on this. Speaking of antitrust, let's talk about Boeing. Not to, dredge up, 30-year-old wounds from their purchase of McDonnell Douglas, which, to be fair, McDonnell Douglas was probably going to end up having to merge with someone because they were kind of a company in decline for 30 years anyways. But Boeing, after merging with McDonnell Douglas, has basically become McDonnell Douglas, which is not great given, the track record of McDonnell Douglas as they headed towards that merger with Boeing. So there's been an FAA panel that has been reviewing Boeing's production processes and safety, processes and things along those lines. And they've issued, a whole bunch of recommendations, 53 of them actually, in this report on Monday in order to try to improve things because, as we've, seen from the end result, Boeing safety processes are just not up to snuff, Mark.
Yeah, part of me wants to, and I've said this before, so pardon me, but dismiss is too strong of a word and way too cavalier given the threat to life here. But some of this stuff is to be expected. These are so-called normal accidents in a very complex thing like a plane with up to 1 million parts, as I understand it. Again, not excusing any bad behavior away, but unavoidably things that seem appalling to us as outsiders and just egregious oversights. You forgot to put a bolt in? Are you kidding? Even I know to do that when I'm hanging my TV. But again, 1 million parts, layers of bureaucracy, some oversights are to be expected. Again, normal type accidents, but this appears to be far more systemic, and there are, as I understand it, well-documented instances of people who are supposed to be, say, inspecting something, feeling under pressure to get the job done quicker or to overlook potential shortcomings, and that's obviously a cultural, systemic problem.
Let's take a quick break here. When we come back, we'll talk about hotel staffing shortages and then also Macy's closing some additional stores.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Are seeing hotels trying to staff back up after cutting staffs dramatically during the pandemic, and so as a result, you are seeing higher prices happening and still lower levels of overall service in the hotel industry. Mark, your thoughts on this?
Yeah, it's consistent with evidence we hear elsewhere in the lower wage, lower skilled, and I'm not putting the jobs down. We've all done them, and America needs them. But we've seen this phenomenon in other pockets of the labor market affecting lower wage, or that involve lower wage, lower skilled workers. So there's the sector-specific story, which is what this article covers. And then there's the knock-on effects for the economy as a whole story. The latter, I'd say, for reasons we discussed in the opening segment. Inflation is the increase in average prices over longer periods of the trend in which over longer periods of time is what policymakers and investors should care about. So I'd say not really relevant for, say, decision-making of investors or the information that policymakers like the Fed use to inform their decisions. The article doesn't offer itself up as being informative to policymakers, but don't worry about it from that point of view. Not a big surprise from the labor market point of view. Conditions have changed since COVID.
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to visitusvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Macy's announcing yesterday they're going to be closing 150 stores. That's about 30% of their remaining footprint, which is rather remarkable. I mean, you think about it, that a few years back in 2019, they still had over 870 stores total. Now they're going to be down to 350, and that's a pretty dramatic reduction in a 5-year time period. The stock has, been fine-ish with periods of, well, look, the stock can best be described as Shakespeare, full of sound and fury, signifying nothing, and that it's basically gotten to the same point the S&P 500 has gotten to over the last year and a half, but it's done so with much bigger ups and much bigger downs, and, it's been a much more volatile ride overall. the question that I have with Macy's is the same that I ask about any retailer today, which is, and this is going to sound mean, but it's really not. It's a question every retailer should be asking themselves, and if they can't answer it, then they have a problem. What is the reason for you to exist? And it's not mean. It's, look, in a world where I can go on my phone and order cat litter at the push of a button, what is the reason for a store that sells cat litter to exist? Why do I need to go there? Macy's, when we talk about what they do well and why someone needs to go there, what's the selling proposition, Mark?
I guess the answer might come in another Shakespeare quote, Chuck, the only one I know off the top of my head. I think, what's in a name? Does it still have cachet? Do you trust their buyers to pick?
Here's what Macy's does very well. If you are registering for a wedding, baby shower, any event like that, they got a great process, and it's really easy to do, and they got stuff that you would normally want in those niches. Other than that, it's kind of like, what are we doing here, you know?
I mean, in the old days, people trusted department stores and their buyers to curate for them, right? You had to rely on the buyers at Bloomingdale's or Macy's to get the latest fashions. I don't know, maybe I'm going back too far, even before my time. These days...
No, this is good. This is good, Mark. This is great.
These days... I think you're being so. I think
I
you're
am.
Being serious.
No, this is great.
But do I need Bloomingdale's to tell me what to wear anymore? I just go online and ask, what's the, obviously I don't. You can tell by the way I dress, but if I did and cared, that's what I would do. I wouldn't need a buyer at Bloomingdale's to curate for me. Maybe that intermediary role is just obsolete.
I never thought of it that way, but you're almost describing what happened to travel agents over the last 20 years.
Yeah. That's a good analogy.
It's almost like that. And I've never thought of it that way because, look, there are still stores where there is value to going in there. You walk into a Jordan's furniture store, man, like it's overwhelming. It's a fantastic experience. And you go in there and you're like, I'm going to be able to find all kinds of stuff at fair prices, and here's how it's going to work.
And they lay it all out for you, too, right?
Yes.
So you don't have to be a designer or you don't need a designer.
Exactly.
Yeah.
There's value to going in there. And they also said, look, here's stuff just to get you here. There's an IMAX theater and a climbing gym and this and that just so you're here by accident. Macy's, on the other hand, is like, well, we got jeans from Levi's.
We have a polo section.
And polos from Polo.
It's so true.
It's just kind of like, well, why do I need to go to you to do that? So yeah, it's tough, and I'm not saying this to be mean. I'm saying it's a hugely competitive business, and it's cutthroat, and you gotta come up with your reason for being. Raison d'être. Let's take it. I don't speak French. I don't even know if that's the right way to say it. Let's take a break. We'll be back for hour 2 in a minute. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. you might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org, CancerSupportMass.org.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you. And if you've loved the boring markets of the last couple days, then golly gee willikers, you are just going to love today. The Dow is down 134 points. Okay, 0.25%. The S&P 500 is flat, 0%. The NASDAQ is up 28 points, about 0.2%. So overall, very mixed, very much, not really doing much in your major U.S. indices. 10-year U.S. Treasury is down 1.4 basis points to 4.285%. Oil, West Texas Intermediate, moving up a little today, up 79 cents a barrel to 78.37. AAA National Average for gas prices up 0.005 cents to 327 1/10. And we've got gold, the yellow metal, up $5 an ounce. And in crypto world, Bitcoin up another $2,200 per Bitcoin to about $56,000, almost $57,000. And the reason why I mention that today is because our top story this hour is from the Wall Street Journal. Hot new Bitcoin funds could soon have rivals. And what it's talking about here is that a few weeks back in, I think it was late January, early February, a number of different Bitcoin ETFs launched after the SEC was forced to reverse course and basically allow for them to be launched after losing a court ruling. And you've got a bunch of a bunch of providers now that are looking to not just have Bitcoin ETFs, but also, as I quote here from the Wall Street Journal, looking to launch the first U.S.-listed ETFs holding Ether, the second largest cryptocurrency. As with Bitcoin and other ETFs, the firms will earn management fees for any investments people make. And in looking at this, Mark, I'm trying to figure this out here, because if we go back to the pre-Bitcoin ETF, approval, which was it early January, I think?
Yeah, I think that's what it was.
Thanks, Doc.
So the only real fund that was available before then was something called the Grayscale Bitcoin Trust, which did not hold actual Bitcoins. It held Bitcoin futures, and it was pretty much the only way that you could try to do this in a vehicle that was available to investors within, a normal investment account without having to go to a specific cryptocurrency brokerage. And on January 8th, we saw the peak of assets, at least for this cycle. Back in 2021, it got higher, but the peak of assets held by this fund, it got up to around $28.5 billion under management. As of today, it's at about 24, so it's seen a net drain of about $4 billion. And what's interesting is when we look at the other funds that have launched that are out there, there's ones from iShares, from Fidelity, from ProShares, from ARK, from a company called Bitwise, from Amplify, Invesco, whole bunch of them that are out there. So, we've seen, again, there's been, I think, about a dozen launches in this space, somewhere in that ballpark. They've been out there for a couple of months now. Okay, that's fine. Like, they exist. That's no problem. But when we look at the ones that are out there today, and, specifically looking at, I'm just going to pull like the 10 to 12 biggest because they're the only ones that really matter. You're looking at a total here of about $19 billion that has flowed into them over that time. Minus, again, you've had about 4 or 5 come out of this Grayscale Trust, so the net inflows are probably somewhere in the ballpark of $15 billion or so. And I guess when I'm looking at it, like, across, a large ecosystem, is that really a lot? Is that enough to, get people wanting to launch products for the second, crypto that they're going to have in these waters? I'm sure that you can look. It probably makes some decent money, I'm sure, for these companies, because if we look at the iShares one just as an example, it's got an expense ratio of 12 basis points. And I don't know what the cost is of, trying to hold Bitcoin inside of this thing, but I'm sure it's not 12 basis points. So I guess he can make some money on this, but overall, these are kind of underwhelming numbers for, how excited people were about these potential debuts.
I wonder, part of me feels with a good amount of certainty that this is just a tragic, if you sum up, by the way, the holdings in these suckers, it's well over $50 billion. Doesn't look like it's quite 60, but if I missed a few at the end that sum to, another 10 billion or so.
Yeah.
So in the scheme of things, if the U.S. stock market's total market cap is somewhere in the $50 to $60 trillion range, this is not a large amount of capital. So I was about to say this feels like a tragic misallocation of capital. It is a pure speculative binge. But I think most people buying these ETFs go into it eyes wide open. They don't think that they're getting a share of something that has some reasonable, fundamentally discernible value associated with it. They're just hoping it's going to go up. So part of me, the stodgy part of me, says this thing is a total scam. It's obvious to everybody. How is this legal? It should never be in a 401k plan. I don't know if anybody's putting this in their 401k plan. I hope not. But, as an individual investor, you're free to go into a brokerage window if you have one and buy this thing. But I don't think anybody's going into this thinking Bitcoin's the future. I want to own this for 30 years. They're thinking hopefully quick pop from whatever it's trading at now per Bitcoin unit, 50K or whatever, and then I get out of it. So in the scheme of things, it's hopefully harmless, Chuck. I don't think it's got the potential to disrupt the financial system if Bitcoin suddenly collapses due to a lack of confidence. I don't think. I just hope people are going into this eyes wide open. Then again, is it any sillier than buying a stock of even a good company at an absurdly high valuation? That's a purely speculative undertaking. I think you're hoping to hand the bag off to a greater fool before the bubble implodes. Maybe this is no different. I'm kind of torn.
Yeah, I'm not saying it's inherently sillier or not. I guess what I'm going at is, for all the hype about, hey, like this is finally going to be, publicly traded and, this is finally going to be available to the masses. And your first 2 months, excluding
Very
the price,
anticlimactic.
Like you've gotten maybe a net of
good point.
$10 to $12 billion in flow from something that the whole world already knows exists. This isn't something where you're talking about trying to build awareness of it and saying, hey, like this exists. It's the whole world went through like 2021 and 22 where Bitcoin was, every cab driver that you talked to was saying, oh my goodness, this is the best thing ever. So it just seems like kind of an underwhelming launch for something that's already as publicized as it is. And that's for, the premier, the most well-known cryptocurrency.
Interesting take.
If you're talking about, how much interest is there going to be for like the second, the third, the fourth, and so on and so forth, I just don't know how much there is kind of my point, I think.
It is one more entry in the speculative excess column, though, if you look at multiples on, say, some of the I'll just be very broad here and say some of the tech companies without picking on semiconductor manufacturers or other new economy economy companies that we've talked about in the past few weeks. It's one more sign to me, of course, all roads to me lead to the Fed and to the money supply because I'm a fanatic and I'm obsessed with the topic. It's one more piece of evidence that suggests to me that monetary policy can't possibly be restrictive enough if this kind of monkey business is going on. That Agreed. Is a very unscientific take, but it's just what my gut tells me about the relationship between, not my gut, but what a lot of people have found about the relationship between easy money and speculative excess. I don't think the Fed looks at this. Again, I'm obsessed with tying everything back to that and blaming them for just about all that ails the economy in the long run. I don't think they look at this and take comfort from it, or perhaps some comfort from the fact, small comfort, from the fact that it hasn't resulted in an explosion in demand, as you point out.
No, but like this is the kind of stuff I think that they should look at. Not in that like they should. I'm not saying they should target a price for Bitcoin because that's dumb.
Some people would. No, go ahead, Chuck. Sorry.
But what I am saying is one of the things that we said in jest last year. I remember last spring when Taylor Swift announced, her big tour. We were looking at the ticket prices to get in, and like just the get in the door price was like $1,500. And we said, look, the ticket prices are too high. The Fed hasn't done enough cutting. And we said this, enough hiking. We said it kind of in jest, but ultimately it proved to be true. Demand in the economy is still, significant, and it's unclear that the Fed has done enough to vanquish the, inflation that we were previously seeing for good, or not for good, but, they've not done enough to stamp out those inflationary embers. And so I think that when we look at ways that you can, just by proxy, pick up on stuff like this, I've also mentioned the idea of, what do you get when you, what's the maximum stupid thing that you can see in markets that says, hey, like things are a little bit dodgy right now? And it was stuff like, a week and a half ago when ARM announced their earnings that were fine, and the stock doubled in 5 days. Not because like they did anything special, but just they had earnings and they were fine. It when you see stuff like that, it is a sign that there is too much stuff sloshing around in the economy. And does it mean that you necessarily see like an inflationary aspect to it? Not necessarily. Remember, the tech bubble had all kinds of froth in this and that. But we never got close to the kinds of inflation we saw in the 1970s or the 2020s. It was a whole different type of problem that built there. But froth in general is not really the friend of markets in the long run because it allocates capital towards things that aren't viable, and then that capital gets destroyed. See Pets.com or CMGI or any of the other, thousands of tech companies that took in a bunch of money and then promptly ate it. That's the kind of stuff that's not great for an economy in the long run, even if you don't see an inflationary aspect to it.
Yeah, you have to be lucky, too. In the 80s and 90s, there was plenty of froth and plenty of disinflation, but those decades were characterized by favorable, from an inflation point of view, shocks, a series of events that may not be repeated this time.
Let's take a quick break. When we come back, we've got a little bit of trivia, and then we're talking Jamie Dimon after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
There's no bad time to review your financial planning strategy, but with spring coming soon, the perfect time is right now. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's packed with information about planning for a one-time expense this year, like a new car or family vacation, and how that purchase might affect your finances. We also look at how to plan for major future expenses, like a new home or a child's college education. Take the time now to address any issues that may affect your financial strategy and spring clean your finances. The guide is free, and it's yours today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Trivia. It's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, on this date in 2019, Captain Marvel, starring Brie Larson and Samuel L. Jackson, premiered. Captain Marvel grossed over $1.1 billion at the worldwide box office, which is one of 10 movies the actor has appeared in that grossed over $1 billion. Samuel L. Jackson movies have grossed over $27 billion at the worldwide box office. Trivia question today: what was the highest grossing movie of Samuel L. Jackson's career? Once again, what was the highest grossing movie of Samuel L. Jackson's career? Be the fourth person today to text us at 617-362-1385 with the correct answer. And you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Mark, Jamie Dimon he was interviewed as part of the JP Morgan High Yield and Leverage Finance Conference in Miami yesterday, and basically noted, hey, there's still some things that I'm concerned about from a recessionary perspective and some things on the inflation side that are concerning me. Your thoughts on his comments?
Seems pretty balanced, and I always wonder to what degree are these his or any high-level executive being interviewed for something like this? Are they the executive's feelings, or are they the sort of house view of the probably dozens of PhD economists, not all dedicated to economic forecasting, many of whom just work on investment strategies, but are certainly qualified to comment on the future path of the economy? So how many come from a consensus view of what the in-house high-powered experts feel, and what comes from his own gut? But it does seem prudent to not bank on, nor could he. I mean, he is effectively a risk manager. How could you say that we're counting on a soft landing? He'd never say that. So guarded, hedgy, I sort of like it because I can relate. My gut would be to say, well, there's a likelihood that X could happen, but, so could Y, and the risks are roughly balanced or something like that. Probably prudent. What you want to hear as a shareholder from Jamie Dimon.
Yeah, and I think it's also, these comments could be construed, and I think in some places I've seen them talked up where, again, I'm going to quote from him here, the market is kind of pricing in a soft landing. That may well happen, but the market's odds are 70 to 80%. I'll give you half that. That's all. And so you could read that and say, oh, gee, that means that there's like, a 60 to 70% chance that there's going to be a recession or something like that. And you could obviously print, all those kinds of headlines. But we see this often when, if you ask a scientist, what they think about anything, ask a scientist, hey, how hot is the sun? They'll say, well, it may be this hot, it may be that hot, we're not quite sure. And, that can be construed a certain way. It's just because Jamie Dimon operates in a world of probabilities. He's not a binary, this is going to be recession or this is going to be inflation. It's, right. Hey, I consider all of the data, and that's how he talks, because that's how he talks inside his own head as well. So I think that often when we see, a story like this where the headline comes out, Jamie Dimon is, quote, cautious about everything. Well, no, that doesn't mean, that he thinks a recession is imminent or definite. It's just Jamie Dimon has literally built his whole reputation on managing risk, and when you build your reputation on managing risk, you often say that you're cautious about things because that's it's core to your identity.
Now, the best answer in forecasting financial variables or economic variables is usually I don't know. You could take an empirical approach, which just means look at what things have done historically, which we like to do a lot internally. I'm constantly showing charts about what inflation was when unemployment was where it is today, when a little higher, a little lower, because we only have one sample of history, only one set of experiences to look at. That's one way to do your forecasting. Another way is to ask what things might do based on, say, what survey results are or what your personal views are on how things will unfold. It's got to be tough for people who are used to, say, taking what the meteorologist says with very few grains of salt. If they say it's going to rain tomorrow, we know, due to, I guess, the physics of the way things interact in the atmosphere, that there's a very, very, very high probability it will rain tomorrow. They usually don't get that type of stuff wrong. It's not the same in finance and economics. Probabilities come with a lot more uncertainty attached to them, maybe so much as to make them useless.
Yeah, and it's just something that I think we could all probably do a little bit better with in terms of, separating what makes a good headline from what someone's actually saying. Let's take a quick break here. When we come back, we've got the trivia answer, and we're talking potential deflation in retail.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Tune in for Trivia, brought to you by Applebee's. Every day at 11:20 for your chance to win cool prizes. Text us at 617-362-1385 and use keyword Applebee's. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
All right, today's trivia question was, what was the highest grossing movie of Samuel L. Jackson's career? Well, that would be Avengers Endgame, which grossed over $2.7 billion at the global box office, outdoing the record set a year earlier by Avengers Infinity War. Only one of Jackson's 10 highest grossing movies were a superhero movie, that being 1993's Jurassic Park. Steve from Portsmouth, New Hampshire, taking home our Financial Exchange Show t-shirt. And Steve's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine-in only.
Mark, there's a piece in CNBC that I know you wanted to get to yesterday that we didn't have the time to do so. It's titled, Consumers Are Tired of Inflation, but Some Retailers Fear Falling Prices. Can you talk a little bit about what this piece is outlining?
I think my beef, I'll just get to my beef if that's okay, with the general lament that prices are not falling, which you hear from certain pockets. Is it okay if I hit it from that angle? Because that was my...
Yeah, whatever angle you want.
All right, thank you. So I guess we could break.
Oh, hang on. Can we break got
some
breaking
news,
news, Mark.
Yeah, can we break some? Do we have a breaking news bed, music bed? No, doesn't. Tucker's not even paying attention to me.
I don't have a breaking
Okay,
news.
attention, American consumers. Inflation.
This is breaking news.
Prices are never going down, American consumers. End of update. Prices don't go down outside of severe recessions in the modern era. Prices are a function in the longer run of, I'll just say, money supply. Most economists would agree with that statement. In the short run, there are demand and supply factors, but it's mostly money supply. In the modern era, particularly since we dropped the gold anchor, no real pun intended there, broke our link with gold in the early 1970s. Government just prints money whatever they want to. Most of you have heard the term fiat money. It ain't backed by anything, no specie, just a promise to pay, like it says on the on your currency. So full faith and credit, nothing beyond that. In the modern era, Western economies, developed economies anyway, very rarely experience falling prices. It ain't going to happen. You don't want it to happen. Now, that's not to say there cannot be specific prices that fall. Some prices are sticky, if you like. They don't move much for various reasons. Others move around a lot, like oil, Chuck. We talked about this in the last hour. Sure. Food and energy, which is why they cut those out before reporting core inflation every month. So those prices jump around a lot. They can distort the average and the trend in inflation. There are ways core and some of the other measures that we like talking about here that filter those out. But overall, prices are not going to come down, and you really don't want them to, because that would mean probably a very severe recession. Now, if you go back on something like the gold standard, well, prices were just as likely to go up as to go down from year to year. They depended on the supply and demand for gold, which was a global commodity, but they don't come down in the modern era outside of severe economic downturns.
When we talk about this, Mark, in terms of, again, people hear the idea of falling prices and they naturally say, gee, I would love that, because they assume that the other side of that is that their income stays the same. And I think the argument that you would likely make is, look, when prices are actually falling, your income is usually falling as well.
Thank you. Yeah, the best example of that is in the early 1930s. This is now shrouded deeply in the mists of time and in the crevices of our memories from history class. But we had severe disinflation. About a third was the price level drop, I believe. But unemployment was at its peak, close to 25%. When demand falls off of a cliff, prices will come down. That big of a demand shock is enough to get firms to lower their prices. Still wasn't enough to remedy the recession of the early 1930s, as most of us know, if not remember, thank God.
If you've had a successful career and want to make sure you protect your assets, well, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 866-848-5699, or request it at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Mark, we do have a little bit of breaking news, actually. This being reported by CNBC, that Warner Brothers Discovery has halted any potential merger talks with Paramount Global. They have gone, quote, pencils down. I don't know if they've picked up a pen, a ruler, a calculator, or anything else, but they are apparently no longer talking on this, and this ruins the chance of us being able to have a combined streaming service known as Paramount Max Plus, which is too bad. It would be lovely to just throw all those buzzwords together, and unfortunately we're not going to be able to.
So no clue as to the stumbling blocks. The news is only that they're not.
The news is only that it's not
discussing.
happening, and I don't know why necessarily. Look, if I'm completely honest, it's that Paramount Plus might actually have some of the best content on any streaming service, but it's also one of the biggest money losers out of any streaming service. And
what's under their umbrella? Because I can't keep track of all this stuff.
So they have all of the what the heck is it? The
I don't know.
Yellowstone series are under there.
Yeah, Star Trek.
Star Trek's under there. Like all that stuff is on that side. So
Tulsa King.
What's
Nice.
that?
Tulsa King with Stallone.
Oh, I haven't even heard.
It's good.
Yeah,
It's good.
So
It's very watchable.
They've got some good stuff. I'll actually I take it back. I said this a few weeks ago. Apple TV Plus right now has the best slate out of any streaming service, and I don't think it's close.
It's I just subscribed to that again after taking a break, and because I wanted to watch the Patriots Dynasty thing.
Yeah.
And I'm like, hey, this is a lot better than it was 6 months ago.
It
I got
is
a lot to watch now.
You've got between stuff that's like basically live right now, between the Patriots, the Dynasty series, and Masters of the Air. You've got two.
Is that good?
Tucker, if you liked Band of Brothers,
Yeah, that's why
you're going to love this.
Okay, that's
Stupid
next.
question.
It's by the same studio.
Can you still hop in and out of these streaming services month to
Every
month?
month.
You
Every month.
hop in, you binge, you hop out.
Yep.
It's kind of like a hot tub.
Can they change that? What?
It is kind of like a hot
Why
tub.
would that
I like
even
that.
come
Kind
to
of like a hot
mind?
tub.
Yeah, it's too hot. Got to get out.
Yeah, you hop in, you hop out.
Okay. Why don't
Maybe you have a beer or two in there, and then you hop out.
Yeah.
Yeah.
Can't stay in too long.
No. 15
no,
to 20
please
minutes
get out
most.
and use the bathroom, please. Please.
15 to 20 minutes most. But, yeah, I think
Why
Apple
haven't they
TV Plus has a
restricted that?
great suite right now.
Yeah.
Okay.
Insight you
further
won't
to
get
add.
anywhere else.
Yeah, it does.
Tucker Silva on streaming. Yeah.
Let's talk about Zoom, just because I'm trying to rack my brain
Yeah.
to the last time that we actually covered a story about Zoom.
It's been a while.
I'm guessing it might have been 2 years. It might have been 2022. But there's a piece in the Wall Street Journal, Can Zoom's Business Boom Again? And the reason why, they reported earnings yesterday. And the basic path has been that their revenue octupled over a 3-year period. From, well, actually, if we're looking at a different their revenue went up like 12x from 2019 to 2022. And then since 2022, it has gone up by 10%, which is less than the rate of inflation over that time. So the obvious question is, okay, what can they do? And short of Zoom deciding like to launch their own pandemic or something like that, the answer is I don't really know, because this is another example, in my opinion, of a company that runs a fine business. Their free cash flow is $1.3 billion a year. Their net income is $250 million on $5 billion in revenue. They run a perfectly fine business. It's profitable. It has free cash flow that's positive. It's valued at 14 times earnings. It's not something that is crazy. But the problem, like most problems in the investing world, is that people have the most important question you can ask in investing is this temporary or is this permanent? And with Zoom, everyone got it wrong, because the stock in October of 2020 was trading $568 a share, and today it's $66. And this is one of those questions, like, again, permanent or temporary. Everyone got it wrong. Everyone thought this was going to be a permanent shift. Wasn't. And that's why, if you were a buyer 3.5 years ago of Zoom stock, you got crushed. To relate this to another company that we talk about is, maybe being overvalued now, maybe not. You look at NVIDIA. Is it permanent or temporary? The 250% annualized growth rate. Because you go back even 2 years ago when, we were in crypto winter and all that, and back then that's what NVIDIA GPUs were being used for, was a lot of crypto mining and stuff. NVIDIA's growth rate, it never dropped negative. It just dropped to like 60% revenue growth. And that was enough to slam the company down by like 60, 70%. So when we talk about a company like Zoom, it's a fine company. It's not a bad company by any means. They're profitable. They're free cash flow positive. They're not carrying, an obscene amount of debt or anything like that. It's just the valuation thought that they were going to be the way that we did all business forever, and that wasn't the case. So, can Zoom's business boom again? I'll make the case that the business is just fine. It's just that the stock got the stock got way ahead of itself. And that, I think, is the real story here.
Yeah, nothing can grow faster than an average forever. A stock's price can't grow faster than the average market price or the return you get on the S&P. Given enough time, it would become the whole market. Given enough time, their revenues would consume the whole market and then some. So I think logically you can rule that scenario out, period. The question is, how long is rapid growth sustainable for? Markets, as you say, got it wrong, but the way executives are compensated, they have to be growth obsessed. And until that changes, this constant pressure to increase your share price, dividends aren't enough, and other forms of returning cash to shareholders simply aren't enough. And maybe that's a problem with shareholder capitalism. I don't know.
I wonder what I wish I could be transported back to like the 1950s or 1960s to hear the conversations about these kinds of things. Because I do wonder if they were having the same conversations then that we are now, but just with different numbers attached to, everything that was going on.
Well, there wasn't this industry. Nobody owned. Very few people owned common stocks. Even pension funds didn't own. This is way before my time, so I'm recounting here only what I've read. But pension funds didn't own common stocks, or if they did, they owned them. They owned an inefficiently, haphazardly assembled collection of them. There were no index funds before the early 1970s. Obviously, no 401ks before 1981.
What did pension funds own back in like the 50s and 60s?
Bonds.
That was it?
Bonds were sufficient to offset your liabilities. They still are in many cases. We talked about IBM's cash balance plan last week having a so-called surplus, meaning they had room to expand the plan without actually putting money into it. You could do that with just bonds because they perfectly line up. If you think about a pension payout to an individual, your payout perfectly lines up, in theory, with a bond. So bonds are a much more natural fit for somebody who's in the annuitization, the payout phase as an individual, or for a pension fund. And banks, as a result, just went out and bought high-quality bonds for pensions. That was pension management, and there were no 401ks. But stocks were really the preserve of the top fraction of 1% in those days. So there was nothing like this meet. There was a Wall Street Journal, obviously.
But it was a little different.
I think so.
Let's take a quick break. When we come back, we'll do a little bit of stack roulette.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. you might need to realign your portfolio for that coming expense. And so really just, again, it comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All of us at the Financial Exchange are truly thankful for our partnership with the Disabled American Veterans Department of Massachusetts. You can help our great American heroes, too, by making a donation today. Your gifts can support the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation.
I'm going to kick things off, Mark, with the whiny article of the month.
Please.
It's from the Wall Street Journal. Is it ever okay to have an 8 a.m. meeting? So.
When Chuck clears his throat, listen up, everybody.
Yes, it is okay to have an 8 a.m. meeting. And I just find it ridiculous that in 2024 we have to ask this, and that there's someone in this piece who's interviewed who says, quote, whose workdays normally begin at 7 a.m. or at 9 a.m., finds he doesn't sleep as well when he knows he has to get up earlier than usual.
Oh, poor baby.
If the biggest stress in your life is that you might have to get up one day for an 8 a.m. meeting instead of being able to show up at 9, you've got to be kidding me.
Does it give the age of that person?
36.
Okay, so he's no kid.
36. You should be old enough to know that sometimes you got to just do that.
Yeah.
And I'm not saying that like everyone has to get up at 3 a.m. to go to work, because I do think that would suck. But look, our great-grandparents would be like absolutely horrified at what we've become. I mean, this is a generation that said, hey, look, we're going to, march off to World War II, no questions asked, and a lot of them didn't come home. And we're sitting around 90 years later going, oh, gee, you know what, it's real. I get sleep stress that I have to get up at 8 a.m. for a meeting. I mean, come on. Are you kidding?
On top of that, that's when people are most alert, I feel like, right? Like
So,
8 in the morning, you're up, you're ready to go.
Look, I understand. If your hours are 9 to 5, okay, an 8 a.m. meeting shouldn't be normal. I'm cool with that. But if it comes up, it shouldn't be a sleep stress thing. Go to bed an hour earlier if you have to. Figure it out. Just come to work on one less hour's sleep. I don't know. Maybe I'm just a little jaded since I've spent the last 6 months, with an infant getting up every 2 to 3 hours. But you figure it out and you don't hear me complaining every day about how tired I am. Like, you deal with it. This is the business you have chosen. If you have a job that makes you get up at 8 a.m. once a month and you don't like it, go get another job. I'm sorry, but that's just what it is. I'm just not sympathetic to something like this where, like, what I will say, 8 a.m. is not an acceptable time to call someone who is not in your job and expect a response from them then.
Yeah, that's like 9 a.m. the earliest.
You don't call anyone until 9.
Right, exactly.
You don't mow your lawn until 9. Like, things like that. But if you got to come into work one day and do an 8 a.m. meeting, it's fine. You're going to be okay. I promise you'll live. Let's take a quick break for the rest of the day. We'll see you tomorrow on the Financial Exchange, not at 8 a.m.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans